Hi guys, Will here, and in today's video we're going to cover a topic that I almost never see being discussed, and yet it's critical to understand how to handle a drawdown, because the thing is, they happen. They happen to us all, to all businesses, whether you're a professional trader, whether you own a business where you make and sell cakes, whether you're an airline even. Quiet periods happen, drawdowns happen, and today we'll dive into how to handle them like a professional when they do come around, along with how you can come out ahead and really start ramping up your trading earnings again as quickly as possible. And just very quickly, before we dive in today, if you are struggling with your trading or you'd like to know more about how mechanical edges are traded, I've actually put together a free video course for you that will map out and explain everything in detail, along with walking you through exactly how mechanical rules actually work. If you'd like to watch that after this video, I'll pop a link to that in the description and you can click through and watch that straight away. Hi guys, Will here from WB Trading and welcome back. If you are new to the channel, please do hit that subscribe button and tap the bell icon so that you don't miss any of the free content that we share with the trading community here on YouTube. Now, as traders, it's our job to face risk and to face loss, right? We have to face it head on. Whatever the strategy, whether you're a new trader or a professional trader, you will have losing trades and periods of drawdown, no doubt about it, right? They will come around. And when they do, hopefully the tips that I'll be sharing with you today will help, and you'll be one of the few traders out there who can just blast through a rough patch and come back out fighting and growing, right? See, drawdown is inevitable, and in my career so far as a professional trader, and after speaking with and knowing other seven-figure traders as well, it's clear we've all been there, and it's part of why a lot of traders out there do things like mentor others, write books, hold seminars and the likes to almost cover themselves against these periods when they do come around. I mean, I know one professional trader who's a friend of mine who actually had his first ever losing year last year, where he traded the entire 12 months and overall was actually down. But I do know that he coaches others. He's wrote, I think, 2 or 3 books that are done quite well that really helped him through that scenario. But when I actually, when I do speak to other professional traders that I know personally on this subject, the conversation always revolves around how to handle drawdown instead of course how to avoid it, because the former is how to think like a pro and the latter is how to think like an amateur, right? Because again, it's going to happen. So what it comes down to is handling it. Now, it's pretty common, especially for newer traders, to trade aggressively with no regard for risk management. Right. In fact, I actually had a call with a struggling trader earlier today who wasn't even actually using stop losses and who'd over the last few months actually drawn down an account by, I think it was roughly 70% due to this. Pretty frightening stuff, right? And that and chasing losses too, or in other words, revenge trading, it just never ends well. And by trading in this way, not using a stop loss, chasing your losses, you are just going to do more damage. That's the truth. And this is where tip number 1 comes in. You must have a clear, pre-planned, repeatable process that you're able to follow day in and day out, long term, that's proven via statistics to actually provide you with an edge, to provide you with wins that outsize your losses, right? And if you have clear, proven rules to follow, your only job then is to actually follow them through the ups, through the downs. And the great thing about having statistical proof there is that you can look back on this. You can look back on the winning runs, the losing runs, and see that over time you are a profitable trader. The strategy works through the ups and through the downs. And the confidence that brings is just like nothing else. And it's why we share this inside the program that we offer for each of the strategies that we trade as concrete, checkable proof that they actually work to aid confidence at all times. So that's tip number 1. You must have a clear, proven, repeatable set of trading rules to follow, along with statistical proof that they actually work. And with that, you are golden. Whereas without it, well, you shouldn't really be trading. Next, when you're in the midst of a drawdown, it can be tempting to stop trading altogether right? But this is how you miss those winning periods or the huge wins that you need to carry on pushing your account balance ahead, especially when you're in a period of drawdown. Now, instead, one thing that I often hear from other friends who trade full time is to simply decrease risk. Okay, so if you're risking, 2%, come back down to 1.5% or perhaps 1% of your account balance or lower, right? If you're risking 1%, come back to, let's say, 0.5% or, maybe 0.75%, whatever it is, of your account balance or lower. Just pace the period out, okay? Don't just jump ship altogether. And again, rest on your statistics, okay? Look back on periods of drawdown and ask yourself, well, how long did that period last? Okay, what was the maximum drawdown? What was the period? Was it 2 weeks? Was it a month, 2 months? And also, what would that translate to at, let's say, 1% risk or 0.5% risk, for example? And then use that data to your advantage here. Let it inform the risk per trade that you're actually using. So that's tip number 2, decrease risk. And again, refer to your past trade data. And just as a side note here, one thing that I would say is never ever up your risk when you are in drawdown, because this is a way to quickly fire up your emotions and actually do more damage. Say, for example, that we have a trader who has an account balance of $10,000, right? And say, for example, this trader has 5 or 6 losing trades in a row, which that's not uncommon, okay? But instead of lowering their risk per trade, they get aggressive with the hope of covering the losses quickly. Or in other words, they go from professional with a process to gambling and really hoping for the best, right? And as we all know, anyone who's trading using hope or best guesses, well, they are going to lose money. That's for damn sure. You cannot gamble in this game. You have to have a process. And if you don't have a proven process, you are in big trouble. And again, you shouldn't really be trading. And by upping risk in this scenario, all it takes is a few more losses and you are seriously down on your account. Okay, but back to reducing risk. By doing this, you're actually reining in the damage. You're staying calm, you're thinking long term, and you're thinking like a professional. See, trading is about the long term. Okay, it's about long-term growth, survival, not all in this week or this month and let's get as rich as possible. And the only way to survive is to manage your risk properly. Understand that you will definitely grow through a period of drawdown at some stage. Eliminate the emotions from trading and just make sure that your wins are always larger than your losses. Or in other words, have a process, have a plan, think long term. And if you want to be trading successfully in 10 plus years, that is really essential. I want all of my clients to be trading in 5 years, 10 years, 15 years, 20 years plus, not blown up inside of a week, 2 weeks. I'm sure that you want the same as well. Now next, and this is something many traders don't think about, is actually your trading being impacted by personal circumstances. See, this is why it's so important to have clear, proven rules in place to follow, because as traders, we are human beings, right? And if something's going on in our lives, be it health, family, relationships, whatever it is, the thing is, it can really play on your mind and lead to bad decision making, right? And if you trade using discretion, especially, or analysis or news, for example, where emotion plays a big part, if your emotions are off, your decisions will be off too. That's my point here, which is why here at WB Trading, we just remove emotion entirely by trading using mechanical rules that map out every single step of the trading process for you with zero emotion included. But coming back to this, if you do trade using an emotion-based method, as soon as you realize that something's off in your personal life, I would strongly recommend either pausing your trading for just a short while or cutting your risk per trade down slightly, just until the personal problems are solved, or at least until the personal problems are not having a major impact on your trading decision making anymore, right? And in the current COVID-19 environment, feeling stressed, it can further be compounded by our inability to go on holidays overseas due to the border closures, lockdowns in the places that we live, right? It is what it is. This circumstance is pretty unique, and we have to find a way to de-stress, relax, and if we have to, just step back and pause things in that scenario. If you are trading using methods that rely on emotion, decision making, and so on. Okay, and again, there are 2 routes to go here. One is pause your trading temporarily, or 2 is to use a set of rules to keep your decisions logic based, not emotion based. So that's tip number 3, remove emotion. It's just absolutely critical to do it. Anyway, I hope that helps. Hopefully that's added value, and I'll see you next time. Bye for now.